All right, just want to do an audio check in case you can't hear me. If you can hear me, can you please click the raise the hand button at the control panel? If you can hear me, can you please click the raise the hand button at the control panel? Okay, thank you. You may put down your hands now. Okay, you may put down your hands now. All right, awesome. Okay, now today we want to thank everybody for spending your time here. Today our topic is on introduction to candlestick pattern. Now this webinar will share with you how you can interpret price actions on the charts by understanding candlestick and understand what it means to certain charts. Now today we already have 100 people on the line, so I want to congratulate for those of you who come early. So if you're early, you can get this webinar live. Now the webinar is approximately 90 minutes long. On the first part of the webinar, I will talk about the content, and then after that, we open it for Q&A. So if you have any questions along the way, just please write down in the questions segment in the control panel. So when, but I will only address the questions at the end of the seminar. Now, I may not be able to answer all questions, but I will do my best to answer as many questions as I can, given the time limit that I have. Now, before I move on further, I want to talk about disclaimer. Now, whatever I share today is on the educational purpose only, and in no way that I represent give you any buy or sell call for a certain counter. In case you buy or sell after you learn from this webinar, you do it at your own risk. In no way that will represent any Bursa stand in this webinar. Cool or not? Okay. Now, this webinar, we have done this Bursa Young Investor webinar for almost every month, starting from the month of March, and then until now, this is our fourth segment of the Bursa Young Investor webinar, which we talk about candlestick. Previous three webinars, we talk about real estate investment trust, we talk about how to read financial statements, how to interpret the ratio, and then for the subsequent 6 webinars, we'll talk about how to invest in growth stock, how to invest in cyclical stock, how to invest in value stock, and how to invest in turnaround stock, how to identify a sunset stock, and uncover the myth of oil and gas industry. So these are some of the webinars we'll be doing towards for the entire 2017. Of course, if you see that there's any new topics that interest you, we may also roll out new topics when the time comes. So before I go on further, I just want to briefly introduce myself. My name is Shane, and I have about 9 years of experience in the market. I started when I think if you look at me, you could realize that I'm quite young, and I started investing when I was in university. And when I become a financial club deputy president, I started teaching my members and my college mate of how to invest in the stock market, how to read financial statements, how to read the indicators, how to read the candlestick pattern. And now I do it professionally. I'm doing programs for Stock Exchange Bursa Malaysia. I also run programs for investment banks to teach people on investment and teach people on personal finance. So that's a little bit about my background. I have traded stocks, ETF, and some derivative before, and have a fair and a good understanding about various instruments in the market. So yeah, today I'm just sharing my ideas with you. Now, not all products I know very in-depth about, but I will do my best. In case that question I can't answer, I will do my best to answer you shortly via email or so on. Now, today our topic is on candlestick pattern. But in candlestick pattern, it is it's also a huge topic, and there are a lot of candlestick patterns that I can share. But today we will cover the most important candlestick, because you don't have to learn all candlestick patterns. You just need to remember those important candlestick that can bring enough significance, in the chart patterns. All right, so we will go through it fairly quickly because there are a lot of patterns that I want to share. All right, shall we get started? Okay, cool. Now, before I go to candlestick pattern, I want to talk about what is technical analysis, because candlestick pattern is part of the technical analysis. So you know that when we come to investing or trading, there are 2 main schools of thoughts. The first school of thought is fundamental analysis. Now, fundamental analysis teaches you how to select good companies and good asset to invest in based on reading the business model, based on understanding the management, understanding the business, understanding the financial ratio from the financial statements such as income statement, balance sheet, and a cash flow statement. So fundamental analysis will basically tell you what to buy, what stocks to buy. All right, but there's another school of thought which is technical analysis. Now, technical analysis is the attempt to forecast prices on the basis of market derived data. All right, so for technical analysis, there are different, there are a lot of subsets, and by looking at this diagram, basically is you try to predict, you try to see where the price will go to by examining the historical data. So if you look at this pattern, you see there are different patterns here and there, and then you try to predict what is the next pattern that will come out. Okay, and it's the same. You look at the price action, you try to predict whether subsequently the price will go up or the price will go down. So that is technical analysis. Okay, now, but there are three basic assumptions in technical analysis, and which is the foundation of technical analysis. The first assumption is the market discounts everything. So what does it mean? It means that the price that you see now is the market has already priced in everything. So when the news come out, the market has already moved. So the market has discounted everything, and the price now is a reflection of the trader and investor pricing in the market data and the news. Second is price move in trend. Technical analysts believe that price don't move in randomness. Okay, is unlike the Brownian motion that we learn in physics. Price move in trends. Okay, that's why it is easier to predict and forecast. Okay, and third is history tends to repeat itself. And because history tends to repeat itself, it is because human emotion don't change too much, and human psychology when it comes to trading and investing don't change too much. That's why that a certain chart patterns will tend to repeat after it is formed. Okay, that's what. So these three basic assumptions are what the technical analysts believe in. And why do we need to learn technical analysis? Because there's a lot of upside rewards for this. This chart from the Norman Forsberg shows how market timing can benefit returns. If you just buy and hold from 1964 to 1984 over a period of 20 years, your $10,000 will grow to $87,500. Okay, which gross about 11.46% of annual gain. But if you learn how to see the chart and avoid the bear markets, your 10,000 from 1964 to 1984 is about 21% per annum. Okay, your $10,000 will grow to $489,000. If you can understand the charts even better, you can long and short major swings in the market. You can make about 28% per annum. And if you are an expert is understanding small little change in the market by understanding the charts, you can long and short every 5% swing, the minor swing, your average gain per year is about 93%. Okay, that is a whopping high percentage. So your 10,000 will grow to 5 billion. Okay, $5 billion over a period of 20 years. Now, of course, I don't believe that. Any good trader can long and short every 5% swing, but you can long and short major swings, you're already good enough. Okay, so that's the upside potential of technical analysis. And there are a lot of topics under technical analysis. We have support and resistance, which is the basic and which I find is really important. And moving average, we study about volume, we study about different technical indicators. There are thousands over technical indicators, and you don't have to study all, but the major few, I believe, if you can learn how to understand that, like MACD, Bollinger Band, RSI, stochastics, parabolic, stop and reversal. These are some basic technical indicators that you can learn. And the fifth is chart pattern. Okay, now chart pattern is like what we learn, the head and shoulders, double bottom, double up, double top and double bottom. So this to tell you when it is price change by looking at the bigger time frame. Now 6 is candlestick patterns. Okay, candlestick patterns is what we will explore today. And 7 we have Fibonacci, and we also have Elliott wave theory. So, but of course, technical analysis is very wide. Today, we only focus on the 6, which is understanding candlestick patterns. Now, why is it important? Because by understanding candlestick pattern, we can know how to read the chart. Now, there are different kind of charts that we have seen before. And the first and the easiest one to see is line chart. Line chart basically tracks the closing price of the security. All right. Just to share with you how to read the chart. Usually, the top left corner is the security. The name of the security in this case is Maybank, and then on the right hand side of the axis is the price, and it tells you how much is the price trading currently. On the bottom side of the axis, that is the volume. The higher the bar, the more people are buying and selling, and more transactions are done for that security. And then on the x-axis, that is the time, which tells you at the particular time what price is trading and what is the volume. So this is basically how to read the chart. But line chart doesn't tell you a lot of things, and Western people, they like to use bar chart. Okay, in the olden days, Western people use a bar chart, and bar chart give you additional 3 more information. They give you the opening price, the high price, and the low price, in addition to the closing price. Okay, so these are 4 information that bar chart give you. Okay, how to see a bar chart? So this is the bottom of the line is the lowest point that the lowest point of the day. The highest part is the highest point, and then on the right hand side, that is the closing price. On the left hand side, that is the opening price. So this is how to read a bar chart. Okay, but there's a third kind of chart that we would explore in detail today, which is candlestick chart. And do you all agree that this is an easier chart to read because it has a body? In the bar chart just now, we don't see a body, and in the candlestick chart, we see a body. So it's easier for us to tell whether the market is bullish or the market is bearish on that day. Okay, now how to construct the chart is the same like a bar chart, right? So now I want to share a little bit about the Japanese candlestick history. Now, who invented the candlestick? It was invented by Munehisa Homa. Okay, he was Japanese in the 1700s. So he invented this to help him to track the emotion of rice traders. Okay, he was a rice trader, a commodity trader, and he used this method. He draw candlestick to help him to determine when is the lowest price of the rice that time, what is the highest price for that day, and what is the closing price and what is the opening price. So he started to draw this kind of candlestick, and eventually people find that this candlestick helps them in making a trading decisions, and then they start to popularize it. And there's this Western guy who came to Japan to learn about candlestick pattern, and then eventually he took this back to the Western countries, and Western country people started using it. His name is Steve Nissen. So Steve Nissen took the idea of a candlestick back to the Western countries, and after that, the Wall Street people, the European traders, and the Western countries traders, they started to adopt candlestick and replace bar chart. So nowadays, majority of the traders who look at chart use candlestick to help them to make a better trading decisions. All right. So how do we construct a candlestick pattern? So again, this is like the same with bar chart. So we have, if you see that the color of the candle is filled, in this case it's black, so the color of the candle is filled, then that means that day it is a bearish day. That means the market go down. The market open at a higher point and close below the opening price. And you see the shadow. The shadow will tell you when it's the highest point and when it's the lowest point. And if the candle is not filled with color, In this case, it is white. In other words, that means that that day the market is bullish. The market closes above the opening price. So that's what it means. A bear candle is filled with color, and white candle, and a candle that is not filled with color. And sometimes you may see candlestick that is filled with different color. Sometimes you see a blue and a red chart. Sometimes you see a red and a green candles. It just means the same. Okay. Usually, red means a bearish candle. Green means a bullish candle. But in China, it's different. Chinese people love red. So red means going up. Green means going down. So it all is about the same. So you can tell that the color doesn't matter much. The idea is you must know which one means bullish, which one means a bearish signal. Okay, now these are some of the leading candlestick patterns. Okay, now candlestick pattern is a leading indicator for price action and an efficient way to gauge investor sentiment. Now on the chart, you see there are a lot of candlestick patterns, right? You see a spinning top, you see a doji piercing pattern, a marubozu, shooting star, dark cloud cover, engulfing patterns, and inverted hammer. So these are some of the most basic candlestick patterns, which we will go in depth and study a little bit. But you don't have to study all candlestick patterns. You need to study the major candlestick patterns that bring more significance to the market. If you learn so much more, then it will confuse you. But of course, if you have time to learn more, it will be best. Right? If you don't want to become a an really experienced trader, you don't see price action so much. So you just learn a few that's major. Now, a candlestick pattern is a leading indicator. Now, unlike some technical indicators like a MACD, Bollinger Band, RSI, stochastic, parabolic stop and reversal, which are mainly lagging indicators, because technical indicators, they are formed because of they are derivative of the price, right? Or they are derivative of the volume. So we only have the data only comes out after you have the price. Okay, after you have the price, the data only came out. Okay, but candlestick is different. Candlestick is leading indicator. When the candlestick form, it means something. Okay, it will tell you whether the price has a higher likelihood to continue the bull or continue the bearish sentiment for in the short term, or it has reached a peak or a trough and then it is waiting for a reversal. So candlestick is a leading indicator because it doesn't derive from the price action itself. It would foretell you or try to forecast where the market is heading to. Now, a chart pattern is also a leading indicator. By seeing a head and shoulder, you know that it's highly likely that the market has reversed, okay, and will reverse in the future. And a candlestick pattern is also a leading indicator. Okay, so by leading indicator, what does it mean? It means that it is not as a it may not be as accurate as a lagging indicator, because lagging indicator only form after the price comes out. A leading indicator forecasts where the price will go subsequently. So a leading indicator tend to have more mistakes than a lagging indicator. But one thing good about leading indicator is it helps you to forecast price better than a lagging indicator, because lagging indicator might be too slow and you may not have or you may lose the opportunity to react to the price. Okay, there are two types of candlestick patterns. We have reversal candlestick pattern and continuation candlestick pattern. Okay, so today we will spend more time into studying these two, but we will emphasize a bit more on reversal than continuation, because reversal is very critical and it will tell you when it's likely to be the turning point. Okay, and in fact, we have more reversal in candlestick patterns than we have for the continuation candlestick patterns. So the first reversal candlestick patterns that I want to share with you is this pattern called hammer and hanging man. So what is hammer and hanging man? Okay, so you see the chart on the right, which I circle. So on top there is a hammer. At the bottom there is a hanging man. A hammer is formed at the bottom of a chart, and a hanging man is formed at the top of the chart. So hammer is formed during downtrend, hanging man is formed during an uptrend. And you see that actually you see the candlestick itself looks like a hammer. And the candlestick itself also look like a hanging man, because it's just imagine somebody is hang there, okay, at the top of the ceiling. Okay, so when you see a hangman, it means that the guy is dead. Okay, the guy is dead, and then the price is likely to reverse. Okay, when you see a hammer, it also means that the downtrend is about to be over, and then the price is likely to reverse. Okay, now how to construct a hammer is we see that the real body is at the upper end of a trading range, uh, and or the lower end of the trading range. The color of the real body is not important. Okay, the long lower shadow should be twice the height of the real body. So just imagine, you see, the price opened that way. Okay, let's say this is a price, and then the price at the downtrend, the price tried to push down, but then there was a very bullish force that pushed the price up, and eventually the price closed above the closing price, and then a hammer is formed. That's what it means, that the bullish momentum has come, and then the trend is likely to reverse. Okay, the same goes to hanging man. The price opened this way, and then they try to push down, and they try to push up, and then the price don't go up further, but then close below the opening price, and that means that uh, the force is unable to make a significant make another breakthrough in terms of a better a better higher point, and then the trend is likely to reverse. So that's what it means. And the hammer and hanging man should have no or very short upper shadow. Ideally, it's no shadow, upper shadow, no upper shadow. Or if there is a shadow, it should have very short upper shadow. And the longer the lower shadow, the shorter the upper shadow, the smaller the body, the more meaningful is a bullish hammer. Okay. Although the real body of the hammer or hanging man can be white or black, it is slightly more bullish if the real body of the hammer is white, and of course slightly more bearish if the body of the hammer or the hanging man is black. Now it is more significant if on that day where hammer and hanging man appears, we have a large volume. We have a large transaction volume, because the higher the volume, if the volume is above the average, it means that the hammer and the hanging man is likely to be real. Okay, it's more significant. If when the day where hammer and hanging man comes out, you see the price action comes out, but the volume is very little, it's likely that the candlestick pattern is not as reliable as when it has a higher volume on that day. So that's hammer and hanging man. Okay, now of course the same pattern will go for Dragonfly Doji. Okay, you see a T there, which we call it a Dragonfly Doji. So a Dragonfly Doji works exactly like hammer and hanging man. Okay, the function is the same, which it tells you it is a reversal candlestick patterns, and it is more significant than hammer and hanging man. Okay, so let me explain what is a doji. So this is a doji. And hear me right, I say doji, okay, not doggy. So a doji is it's like a cross. Okay, you see a cross, and what does it mean? It means that the opening price and the closing price is the same. That means that day the market open at this price and close at the same price. Okay, when it open. So that's when you see a cross, or you see a T, or you see an inverted T. So a T is called a doji. A long T is called long leg doji. Sorry, a cross is called doji. A longer cross is called long leg doji, and the T is a dragonfly doji, and an inverted T is a gravestone doji. Okay, and Dragonfly Doji and the Gravestone Doji's significant reversal pattern, and the Doji and Long Day Doji just means that the price is uncertain. Okay, it's stationary. It means indecisions. The bull trader and a bear trader are fighting and they are equal force. Okay, so that's what it means. So when you hear people say doji, it means that the opening price and the closing price is the same. So let's go to some example of a hammer. Okay, if you look at this chart, this is Inari. So if you see that Inari has been very bullish over the past 3-4 years. So on the chart, we see that you see the purple circle there. You see a purple circle. So that is a bullish reversal pattern. You see hammer appear at the end of a trend, and then after that, subsequently it reversed. And then today, we see Inari at a really higher price. Okay. And then let's look at another example for hanging man. So this is IWCT, and then I think earlier last month this was a very speculative stock. At some point that it has over the past few days it has a limit up and limit down. So in March they have a limit out, and then in May there's 2 days limit down, and then subsequently Bursa called it a UMA, okay, unusual market activity. So, but on April, I think it's April 3rd, we see that there's a inverted hammer there, okay, and that's when it tells you that the price is about to reverse. It gives you a signal that the price is about to reverse. So let's go for Dragonfly Doji. Okay, so Dragonfly Doji appears at the bottom of the chart. Okay, if you see this is Maxis, so in May on May about 16, we see that there is Dragonfly Doji there, and subsequently after the Dragonfly Doji appears, the market reversed and marched to a higher point. Okay, so this is where a candlestick pattern tells you when is the price likely to reverse. All right, so before we go to the next one, let me see if there's any questions. Okay, hang on, yeah. Okay, great. So let's proceed. Engulfing pattern. Okay. So engulfing pattern is is another reversal candlestick pattern, and it is formed like this. Okay, we see a bullish engulfing, and on the right of the chart, it is a bearish engulfing. And this is a reversal pattern that can be bearish or bullish. And the first day is characterized by a small body, followed by another opposite color candlestick whose body completely engulfed the previous day body. As you see in the chart, you see for a bullish engulfing, the white candle completely engulfed the black candle. And on the right hand side of the chart, you see that the black candle completely engulfed the white candle. And then two candlesticks comprise the engulfing pattern. The second real body must engulf the entire the prior real body. It needs not engulf the shadows. Okay, but in the example here, it really engulfed the shadow. Okay, that's engulfing pattern. It is a reversal. It can be bearish or can be bullish. Okay. Now this is an example of bullish engulfing pattern. Okay, it is a public bank. On the chart, you see that there is a bullish engulfing pattern in August, and when the bullish engulfing pattern appears, the price reverse and much higher. Okay, today I think public bank is trading at about 20 ringgit. And this is another bullish engulfing pattern. So you see the bull candle completely engulfed the doji prior to that. So, and then after that, the price reversed. This is Data Sonic. And this example of a bearish engulfing pattern. Okay, when the bearish engulfing pattern appears for Tenaga, it already caused the top of Tenaga, and then Tenaga go down. Okay, And I think today is trading about 13 to 14 ringgit. So this is a bearish engulfing pattern. And engulfing pattern is a very strong reversal candlestick pattern. And we are done with the engulfing pattern. And today we have a lot of patterns to show. That's why I need to go a bit faster. Now, the third is a piercing pattern. So what is a piercing pattern? Piercing pattern is a bullish reversal pattern. So this is how it looks like. The first day we see a strong black body. And the second day, it gaps down, open but closes near the high of the day and well within the prior day's body. Now, unlike a bullish engulfing, the next day body completely engulfed the prior day body. But in this case, the piercing pattern did not engulf the whole body, but it closes well within the prior day black body. So in this case, a bullish engulfing pattern is a stronger reversal pattern if compared to a piercing pattern, because a bullish engulfing engulfed the entire body of the prior day's candlestick, but a piercing pattern did not engulf the entire candlestick. It only go well within. So in this regard, a bullish engulfing is a stronger reversal pattern if compared to a piercing pattern. But for us to call it a piercing pattern, it must penetrate more than 50% of prior black body. Okay, this is an example of a piercing pattern. You see the next day, the candle gaps down, open lower, and then it opens it penetrates well within into the previous day body. Okay, when you see a piercing pattern, it is likely that the trend reverse. For this Suncoin with Sunway Construction, you see when in August 2015, when the piercing patterns appears, the price reverse and much higher. So this is an example of a piercing pattern. Next, we see a dark cloud cover. So what is a dark cloud cover? So this is how it looks like. Okay, it's a bearish reversal pattern. Okay, a dark cloud cover is the opposite to the piercing pattern. Unlike piercing pattern, which is a bullish reversal pattern, a dark cloud cover is a bearish reversal pattern. So first day we see a strong white body, and then second day it gaps up open and then closes near the low of the day and well within the prior day white body. So this is a dark cloud cover. When dark cloud cover shows, it means that the uptrend is likely to reverse. And the best is to penetrate more than 50% of prior white body. Okay, and it's usually formed in an uptrend. So in this example, we look at Gadang. Okay, you see Gadang has steadily marched up since end of 2015, and then when a dark cloud cover appears at the in January 2016, the price has gone down. Okay, so this is when dark cloud cover tells you the top of an uptrend. Okay, so this is an example of a reversal candlestick pattern. This is a bearish reversal candlestick pattern. Okay, you see the black body opens up higher than the prior day's white body, and then it closes well within the prior day white body. So this is when this appears, it is called a dark cloud cover, and it's a bearish reversal pattern. So let's go to the next candlestick pattern, which is stars. Okay, now what is a star? So a star is like the diagram on the right. A star is a small real body that gaps away from the large real body preceding it. Okay, when you see a small real body gaps away from the real large body, and this is what we call a star. And the star's real body does not overlap with the prior real body. And the color of the star is not really important, and the star is a reversal pattern. It represents a stalemate in the tug of war between the bulls and the bears. And there are four types of stars. We call these are four significant stars patterns. The first one is called the morning star. The second one is called the evening star. The third is called a Doji star. Fourth is, we call it the shooting star. Okay, let's go go to into stars. Okay, morning star. What's a morning star? So this is what we call a morning star. When you see a morning star, it means that it is a bullish reversal pattern because it's like in the morning. Okay, it's morning. You get ready to work, and then it represents a good day. So people are looking forward towards a morning star because when they see morning star, it's likely that the downtrend is about to be over, and then it is likely to reverse to an uptrend. So people call it the morning star. So first day we see a strong black body like what we saw, what we see on the screen. And second day we see a star gap down from a prior day, and then doesn't move so much. A small real body. And third day is a white real body that moves well within the first day black body. This is what we call a morning star. And morning star is more significant if there's a gap between the first candlestick and the star's real bodies, and then in the star's third candlestick real bodies. And the third candlestick closes deeply into the first candlestick's real body. The morning star is more significant if the third candlestick closes deeply into the first candlestick real body, and there's a light volume on the first candlestick and a heavy volume on the third candlestick. Because any time when there's a heavy volume, it means that the candlestick is likely to be more real and reliable. Okay, so if you see a first day light volume, last day, the third day, it has huge volume, it means that the morning star is more significant and the trend is more likely to reverse into an uptrend. Okay, people very look forward to a morning star. And a different variation of the morning star is a morning doji star. And a morning doji star is more significant than the morning star. I mean, it's a stronger bullish reversal pattern than a morning star. Okay, so let's look at an example, and this is an example of the morning star. Okay, this is Asiata. Okay, Asiata has been on the downtrend since 2015 until early 2016, and then in end of May we see a morning star appears. We see a strong black body on the first day, and then the second day we see a star, and then the third day we see a white candle which closes deeply into the first day candle, and this is what we call a morning star. Okay, and then after that the trend reverse. Now the next star we want to look into is the evening star. Now evening star is the opposite to the morning star, where morning star could represent a sunrise, and evening star could represent a sunset. The sunset is usually not very good because it means that the day is likely to over, and then in this candlestick pattern it means that the uptrend is about to reverse. Okay, so this is an evening star, and evening star appears in the uptrend. First day we see a strong white body, and the second day we see a star, and third day we see a black real body that move well within the first day white body. So that's what we call an evening star. An evening star is more significant if there's a gap between the first candlestick and star's real body, and then there's a gap in the stars and the third candlestick real's body. Okay, and the third candlestick closes deeply into the first candlestick real's body, and there's light volume on the first candlestick and heavy volume on the third candlestick. So that's where we call an evening star. Okay, evening star is a bearish reversal pattern. Okay, when you see an evening star, you might want to sell your stock. Okay, that's for trader. Okay, and a different variation to an evening star is what we call an evening doji star. An evening doji star is a even more stronger reversal pattern than an evening star. Okay, because usually doji calls the top or bottom of a trend. So let's look at an example of an evening doji star. Okay, you see SK Press is on a minor uptrend, and then you see a evening doji star, and then the trend change and go bearish. And if you notice, one day prior to that, the SK Press has a long leg doji. A long leg doji means that the buyer tried to push the price up, but subsequently the sellers push the price down, and then the opening price and the closing price is the same. So that means that the sales volume is so high that the price is unable to break a new high. So the price goes down. And the next day we see an evening star. So this tells you that there's a strong selling force at that level. At this case, it's about 1 ringgit at 42 cents. Sorry, 1 ringgit at 40 cent or 42 cents or so is unable to make a new high. So the price reverse. So you see a long leg doji, you see an evening doji star. It gives you you interpret it as the price unable to break new high, the price is uncertain, and then suddenly an evening doji star show up, and then it is a strong reversal signal, and subsequently the price trend down. So this is an example of how to interpret the evening doji star and how it works in chart. And next we see a shooting star. Okay, now this is a shooting star. Shooting star is a bearish reversal signal. Okay, but it is slightly weaker than the evening star. Okay, now if you notice, a shooting star is the opposite to a hanging man. Okay, a shooting star is opposite to hanging man, but both because a hanging man is like terbalik, is the other way around. Okay, the head is hang on top, and then there's a long shadow at the bottom. A shooting star is the reverse. The body is at the bottom of the candlestick, and then there's a long upper shadow. So it is also a bearish reversal signal like the hanging man, but it is slightly weaker than the evening star. Now, how to construct the shooting star? It is a small real body at the lower end of its range with a long upper shadow. And color is not important. Sometimes a shooting star can be white, sometimes it can be black. And an ideal shooting star has a real body which gaps away from the prior real body. Okay, and this is a variation to a shooting star. It is called a gravestone doji. So it looks like a gravestone, right? So when you see a gravestone doji, it is a even more stronger bearish reversal signal than a shooting star, because it means that the uptrend is dead. Okay, there's a gravestone there, it means that the uptrend is dead and it's likely to reverse. You see the price try to move up, but then there's still strong selling force that push the price down, and the closing price become the same like the opening price. That's what we call a gravestone doji. So this is an example of a shooting star. Okay, we see this counter data sonic in early 2014. It trends upwards, very strong bullish trend, and suddenly we see a shooting star, and then the next day the market plunged about, let's see, about 70 cents, okay, down, and then ever since that the trend has have moved downward. All right, so a shooting star in this case caused the top of data sonic. This is the gravestone doji, example of gravestone doji. For II Corp, the company has trended upwards, and then suddenly you see a gravestone doji, and then the price trends downward. Okay, so this is the use of gravestone doji to tell us the top of a trend. Okay, let me move to the next candlestick pattern, which is an inverted hammer. Like the name suggests, an inverted hammer is an inverted hammer. Okay, so an inverted hammer appears at the bottom of the trend, like a hammer. So just now you see a hanging man appears in an uptrend together with a shooting star. Okay, when you see a hanging man or a shooting star in an uptrend, it means that the trend is likely to reverse. When you see a hammer or inverted hammer at the bottom of a downtrend, it means that it is a bullish reversal pattern, and the trend is likely to reverse. In this case, an inverted hammer is a bullish reversal signal, but it's weaker than the morning star. Okay, now it is a small real body at the lower ends of its range with a long upper shadow. Color is not important. It can be white, it can be black, but of course it's slightly more bullish if it's is white, and it's slightly more bearish if it's black. And bullish confirmation is important for inverted hammer. In other words, if you see an inverted hammer and that day and the next day we see a long white body, it could be an engulfing pattern. So it is a stronger reversal signal. So this is an example of an inverted hammer. Okay, you see AirAsia has been trending down. I think trend downs in 2015, and in the end of August 2015, we see there's a hammer, inverted hammer there, and after that, AirAsia price has moved up significantly. Okay, now today is trading at 2 over ringgit. So this inverted hammer tells you the end of a downtrend if you're able to spot it. Okay, now, but of course, there are more reversal patterns. In the candlestick patterns, there are a lot of reversal candlestick patterns. In this case, we have tweezer bottom, tweezer top, a belt hold line bearish, belt hold line bullish, counter attack bearish, and we have a harami pattern, a bearish harami pattern, and we also have a tower bottom and tower top. Okay, so these are some of the more reversal candlestick patterns. But today we can't learn more because if I share so much with you, you will get yourself confused. So for the first chapter of our candlestick patterns, you just need to remember what are the major reversal pattern that I shared earlier on. Okay, like the hammer, inverted hammer, morning star, evening star, shooting star, and the bullish engulfing, bearish engulfing, piercing pattern, and the dark cloud cover. So these are the more important reversal pattern. For the rest of the reversal pattern, it is a bit weaker than the ones that I showed earlier, so it is not so important to learn now. Okay, next I want to go to continuation pattern. But before we go to continuation pattern, let me scan my screen and see if there's any questions. Okay, just give me a minute. So let me go to the question. Okay. Can I have the slide afterwards? Of course, we will share the slide with you afterwards. You can see the recording. Okay. All right. So I see that there's no important question yet. So let me move on. Okay. Continuation pattern. Okay. Now, what is a continuation pattern? Continuation pattern is unlike a reversal pattern, which tells you the trend is likely to reverse, and continuation patterns tells you that the trend may have the momentum to carry on. Okay, that means if you see a continuation pattern, it means that the trend is likely to continue, is whether to go up or slightly to go down. In the candlestick pattern, we have more reversal patterns than the continuation. So continuation pattern, we'll share major one with you. The first one we want to share is 3 white soldiers. Okay, now 3 white soldiers is like what you've seen on the charts on the right. You see that there is 3 really strong white patterns here. Okay, white bullish candles, and when the 3 long white days occur with each successive open being within the body of the previous day and each successive close being higher than the previous day and near the day's high. So this is where we call it 3 white soldiers. So when you see the 3 white soldiers, it means that the uptrend is likely to continue. It's a continuation pattern. Okay, so that's it. Okay, so in this case, we see this stock Jaya. So in end of 2016, we see there's a 3 white soldiers there on the chart, and when you see that, it means that the uptrend is likely to continue because the bullish buying force is still very strong, and then the trend marches even higher. I think today it is about 3 ringgit 40 cent. So this is an important. If you see this pattern, it tells you that the price is likely to trend upward more. Okay, the bullish force is likely to continue. And the opposite of 3 white soldiers is what we call 3 black crows. Okay, and 3 black crows is formed in a downtrend. When you see 3 really long black candle, that's the 3 black crows. Okay, the 3 long black days occur with each successive open being within the body of the previous day, and each successive close being below the previous days or near the day's low. It is a continuation pattern for a downtrend. Okay, so it's opposite the 3 white soldiers. So let's take a look at this counter. Okay, now in this counter we see that there is 3 black crows there, and after the 3 black crows, you see the charts go even further down. Okay, so it tells you that the bearish momentum is likely to continue. So when you see a 3 black crows, maybe you can sell already, because the if a trader, you can sell because the bearish trend is likely to continue. Okay, now for me, these 2 are the major continuation candlestick patterns. Of course, we still have more continuation candlestick patterns. We have high price gapping play, low price gapping play, bullish separating line, bearish separating lines, bullish side by side white lines, bearish side by side white lines, bullish rising 3 methods, bearish falling 3 methods. So this, when you see this thing, it also means continuation. Okay, now sometimes the price don't trend forever. Just now, when what we saw in 3 white soldiers and 3 black crows, it means that the bullish and the bearish force is likely to continue. Sometimes the trend may take a break. Okay, and when you see a bullish rising 3 methods or bearish 3 methods, it doesn't mean that the trend is reversing. It just means that the trend is taking a break. By the previous uptrend has a previous uptrend. For the bullish rising 3 method, the previous uptrend is taking a break, and after that it rises even higher. So it is not a reversal pattern, it's a continuation pattern. So for the same goes for bearish falling 3 methods. When you see a downtrend and suddenly you see 3 small white candles going up, it doesn't mean that the trend is reversed by having 3 successive white bullish day, but it means that the next day come out with a strong black candle. It means that it is a bearish falling 3 methods. The downtrend is likely to continue. The previous downtrend is just taking a short break, and then the chart downtrend is likely to continue. So of course, we hardly see people talking about, oh, there's a high price gapping play, because this is a very complicated price pattern. Usually when I talk about continuation, more people talk about 3 white soldiers, 3 black crows, or maybe bullish rising 3 methods or bearish falling 3 methods. And more people use reversal pattern than the continuation pattern. So in this case, I only share about bullish, the 3 white soldiers and the 3 black crows, because that's where more people use. Okay, the rest you can roughly remember as, and it is not so easy, to remember the name. Okay, unless you really want to become a very professional trader. Now, in conclusion, there are literally hundreds of indicators and thousands of trading systems. Okay, you don't have to learn all. You don't have to learn all these indicators or thousands of trading systems, or maybe thousands of candlestick patterns. To me, price is the single most important signal on the chart. Okay, when I trade, I usually look at the price first. Okay, to me, I don't rely so much on indicators. No, when I first started trading, I use a lot of indicators. I want to see when my MACD is bullish, when my RSI is exit the oversold, go into the exit the oversold region, when my Bollinger Band show me a bullish signal, when my parabolic stop and reversal show me a bullish signal, when my stochastic show me show that the price exit the oversold and go into exit the oversold region, and then I will buy. So it's unlikely that for the indicators to point at the same picture at the same time. So for me, after I learn about understanding price pattern, I rely more on the price pattern than the indicators. But it doesn't mean the indicator is no good. It just means that to me, price is the single most important signal on the chart. I usually look at the price first, and then I enable one or two indicators. For example, I want to see the volume and enable the volume indicator. I want to see whether it's overbought, oversold. I see the overbought, oversold. I use the overbought, oversold uh, oscillator. Okay, if I want to see the momentum, I may use the MACD. So I look at the price first, and I usually look at a naked chart. I will draw support and resistance, and then I'll see if a candlestick pattern appears in an important zone. Let's say if I see a hammer with a very long shadow at the bottom of the trend, and it falls exactly on my previous support level, it means that it is a very reliable bullish reversal pattern. Likewise, if I see this is the resistance level, and I see let's say a shooting star or an evening star at the stop right at the very strong resistance level, is likely to be very reliable. Of course, if it's coupled with a huge volume, it means that it is even more reliable to be a bearish reversal pattern. So to me, I always draw the support and resistance. Then I see the candlestick pattern, and if I need indicators, I will enable the indicators to help me whether this is oversold, overbought, and whether this has the momentum has changed. So to me, price is single's most important signal. After price, I only read indicators in the context of what the price is doing. So that's my personal preference. Okay. Yeah, when any indicator is used, it should add something that the price alone cannot easily tell us. Okay. Yeah, so there's a conclusion. So we have done with the 1 hour content on the candlestick pattern. Now I want to open it for questions and answer. Okay. Now before we go to the question and answer, let us do something fun. Okay, can we launch a poll? Okay, in the meantime, if you have any questions, you can write in. Okay, let us launch a poll. On your screen, you see that a quick poll which tests whether you are paying attention just now or not. Now, which of the following is not a reversal candlestick pattern? Okay, just tick. Okay, I see that a lot of you has answered the question. 65% of voted has voted. Let's wait a while more while the rest of you typing in your questions. Okay, now I see that almost 80% of you have voted, and I would like to close the poll and share with you the results. Okay, share result. Okay, now 78% of you has voted that 3 white soldiers is not a reversal candlestick pattern. Shooting star 4%, dark cloud cover is 13%, 5% is hammer. So the answer is 3 white soldiers is not a reversal candlestick pattern. Okay, now so almost 80% of you got it right. Okay, I think so that's it. Okay, the other 22% didn't pay attention. Okay, so we're going to hide the result now, and on my screen I have seen a number of questions. So let me address your questions now. We have half an hour to go for Q&A. Now, first question is asked by Law Zi Law. With all the reversal and continuation pattern, is there any percentage of how accurate this pattern? Okay, now nobody can tell you the accuracy of this pattern. When I say that, when you see a certain pattern appears, it only means that the reversal and the continuation pattern is likely to follow through. Okay, but will it give you a false signal? Of course, it gives you a false signal. If every time a hammer appears, it means that it will reverse, then everybody will make a lot of money from this pattern. But the truth is, it is not true all the case. Now, as of how accurate I don't know. Okay, nobody has the answer like this is the 70% accurate. When bullish reversal pattern appear, when let's say a hammer appear, it is 80% accurate. Nobody have the answer. But for me, if a reversal pattern appears at a significant level, like a support level, at a strong support, at a strong resistance, it just means that the trend is likely to reverse. It's more likely to reverse. When it couples with a huge volume on that day, it means that has a stronger significance to that pattern. Okay, so I don't know how accurate it is. Next question is when to buy if you see 3 white soldiers or 3 black crows. Okay, now wait, let me go to my screen. Okay, when to buy if you see 3 white soldiers or 3 black crows. Well, I if you are a trader, let's say if you are an investor, if you are very uh, bullish on the stocks that you buy, and then you have missed the trend, and you see that the 3 white soldiers appear, my advice is you can buy it the next day. Okay, when you see a 3 white soldier, it means that the trend is likely to continue, and you buy it the next day. And when you see a 3 black crows appear, and then I think it is likely that the bearish trend will continue, and then you can sell. Okay, you can sell. Of course, if you are trading futures, you see a three black crows, you can short the futures. Okay, that's for me lah, huh? Just for me. Okay, but you can it give you a meaning, but you don't have to follow what I do. Now, how do you define, the next question asked by Sam is, how do you define low and high volume? Well, if you just look at the benchmark, you just look at the average volume. If the average volume for that stock is, let's say, 5 million shares traded on an average day, and if that particular day we have 10 million, it means that it is higher volume. If the average is 5 volume for that particular stock, and on that day the stock is only trading at 2 million, it means that it is a lower volume compared to the average. So next question is, how do you use resistance and support line to indicate? How do I use resistance and support line to indicate? Well, if you want to draw support resistance, maybe let me go to the live chart and show you how to do that. Okay, just give me a minute. Okay, hang on. Just give me a minute. Okay. Can you see my screen? If you okay, can you see, if you can see my screen, can you click the raise the hand button? If you can see my screen, can you click? Okay, thank you. I can see that you can see my screen. So I'm using this software called the Chart Nexus, and by the way, which stock you want to buy? Let's say we talk about Bursa. Okay, let's see Bursa. Since today we are in a Bursa webinar, okay, let's see Bursa. Okay, you see, how do we draw support and resistance? So in this case, you see that in the recent in April, we see there's a strong support and resistance here. So you can draw. Okay. So this is how I draw support resistance. You see the price touch this line is about this is about the control panel is, let me see, Okay, so you see there's a resistance here. The price touched this resistance pattern and be able to go through, and this is about 10 ringgit and 30 cent, and then subsequently the price trend downward. So if you want to zoom in a bit further, let's see if we can tell if there's any candlestick pattern here or not. Okay, so do we see a candlestick pattern? So this is a harami pattern. Okay, this is a harami pattern, which I didn't cover too much just now, but this is a harami pattern. Okay, and then after that we see a long white candles break through this resistance level and then it go up, and then likewise go for here. Okay, you see there's support and resistance. The price march upwards, touched the support at about, let's see, it's about 10 ringgit. 10 ringgit is a key psychological resistance level. So when touch 10 ringgit, it trends downward, and this is the short-term bullish. This is a short-term bearish engulfing patterns. Okay, we see a short-term bearish engulfing pattern. The trend go downward a bit, and then we see a two white Marubozu shoot upwards, and then it touch the resistance here, and then subsequently it break out of this resistance level, and this resistance level become a support level, and then go up and touch down. Okay, you see the beauty of support resistance is once the support is broken, it becomes a resistance. So it go up, and then it trade within this range between 10 ringgit and 10 ringgit 30 cent, and break out again and it much higher. Okay, so this is how you see when a bearish engulfing appears in at the resistance level, it is more meaningful. Okay, so that's how we draw support and resistance. Okay, in this case, we see that there's a strong resistance here, and stock tend to trade at this range. Okay, and there's another resistance here. You see, it connect the previous high, and you can tell this is the high when people are trading, where this is the resistance level. Okay, this is another resistance level. Okay, and then this is a trend line. Then let us see, is there any reversal pattern here? Now at the top of the range, we see this is a harami pattern. Okay, which we didn't study much just now. And after this harami pattern appears, the price tend to trend downward. Okay, and then subsequently it is much stronger upwards. So this is how I draw support and resistance line. Now, by the way, there are a lot of charting software you can use, but personally, I use ChartNexus because I'm like Malaysians, we all like free stuff, right? So ChartNexus is free. I use ChartNexus to help me to see the price action. Now, for those of you who ask us like which software you can use, of course there are a lot of software you can use, but if you want free stuff, you can. I think ChartNexus is quite a good software you want to use. And if you go to their website, if you download the software, chartnexus.com, and if you write into the support at chartnexus.com, you mention that you are from you heard about ChartNexus from LiveChamp, I think they can give you 1 month additional 3 years data, additional full year data. Okay, for all the free subscription, you only comes with the 3-year data, but if you mention you're from LiveChamp, they can give you historical data. Okay, now let me go to the next questions. I've answered how do you use support and resistance to indicate. The next question is, what is the usual time frame for the chart to predict trend? It's weekly or monthly? Now this question has nothing to do with candlestick, but I can explain a bit more. So let me go to my screen first. Okay, when is the usual time frame for the chart to predict trend? I personally use a daily chart more. Okay, but you can use weekly and monthly chart. To me, the bigger the time frame, the more accurate it is. Okay, of course, if you can't even manage a daily chart, you don't go for a smaller time frame. Okay, if you're a beginner, I advise you to use a bigger time frame by the daily chart. If you're more expert, you can go for hourly chart or 4 hourly chart or minute chart. That's for a short-term intraday trader. But for us, I feel that the higher the time frame, the higher the accuracy of the candlestick pattern. Okay, that's for me. I usually on a higher time frame, the indicators tend to be more reliable. That means a daily chart is more reliable. The indicators on daily chart is more reliable than the indicators on a minute chart. That's what I mean. So I usually use daily charts to draw the timeline and to see the candlestick pattern. Hope I answered that questions. Next question is, why is it some of the candlestick consist of vertical lines rather than bars? Well, what does it mean? What is it that some of the candlestick consists of vertical? Oh, that's Doji. Okay, I believe that's a Doji. Maybe you have missed my earlier presentation. Okay, a Doji has no body but only vertical lines and the cross and the T. So Doji is when the opening price is the same like a closing price. Okay. Next questions I've seen on my screen is how much do you think a person should invest? Well, to me, I always feel that the higher the capital you have, the better it is. But I always advise people against investing with the money they can't afford to lose. Because when you invest with the money they can't afford to lose, you are likely to become more emotional. When you become more emotional, it is likely that you make a, a, a very bad trading or investing decisions. So for you, if your net worth, okay, if your net worth is 1 million, maybe you can set aside quarter million for investment or half a million for investment. Okay, so up to if your net worth is maybe 100,000, then you probably don't want to put 100,000 to invest. No, that's where you can't afford. But for me, I usually set aside about 20 to 40% of my income for investing and trading. Okay, and for to achieve an optimal brokerage fee, I think maybe 10,000 as a start for investment. Okay, if you invest with 100 ringgit, it's likely that you pay a higher brokerage fee. Okay, if you invest 100 ringgit in a stock, you pay about, let's say, 15 ringgit brokerage fee. You invest 5,000, you also pay 15 ringgit. You invest 10,000, you may also pay 15 ringgit. So you might as well pay 10,000 to buy the stock. But for me, the optimum level is probably about 10,000. Okay, but it's up to you, up to your financial capability. If you only can fork out of 5,000, then you just take the 5,000. You don't force yourself to take a 10,000, because when you invest with money you can't afford to lose, you are likely to make bad trading decisions because you get emotional. When the price go up, when the price go down, you get emotional. When you get emotional, bad decisions will appear. Where can I have the slide? You can't have the slide, but we will send you the recording. Okay. Oh yeah, some of you thank me. Thank you very much. So can I know the pattern shown during the financial crisis or any crisis that happened during every 10 years? Wow, that is I think that you have to look at a lot of factors. Okay, Mr. Tan asked a very good question. He wants to know the pattern shown during the financial crisis, or because we may have learned that every 10 years there is a financial crisis. No, in 1987 we see a Black Monday. In 1997 we see a Asian financial crisis. 2007 we see a subprime crisis. Now is 2017. I think some of you here may get a bit concerned whether when the financial crisis will come. But in this regard, okay, you have to look at a lot of things. Okay, what patterns can show, or you can see if you ask me, every time during financial crisis, the market has reached historical high. For example, in 2007, the market has hit historical high. S&P 500 has hit historical high. Dow Jones has hit historical high, and then after that, market crashed 60%. Okay, the pattern is always at a higher point, and now we are seeing that the major indices across the world are at historical high level, and the realized volatility is at the lowest level. For example, S&P 500 is trading at 2,400 points. Dow Jones is trading at 21,000 points. KLCI is 1,780 points. Okay, and Nasdaq 6,000 over points. And Russell 2000 is also at a higher point. So, and during the last financial crisis, the realized volatility is at 7% in 2007, and now the realized volatility is also at about 9%. And when the realized volatility is so low, it is the next thing we realize that is that the market will crash. So there's one pattern you can see. Okay, but in terms of price pattern, let me go to the chart and see. But I may not be able to show you. I think I may not be able to show you every 10 years because the chart may not have 10 years data. Okay, hang on, yeah. Let me see if you can see any price pattern here. Okay, well, this is Bursa. Let us see. So the last financial crisis is 2007, October 2007. Let me see whether Bursa stock has any reversal pattern or not. Okay. Oops, sorry. Where is my 2007? Okay, in the last financial crisis, it happens during October. So in this case, we see that in 2007, November 2000, October, end of October, we see this candlestick pattern here. Okay, this is, what is this called? This is a bearish engulfing pattern. Okay, you see a bearish engulfing pattern appears at the historical high. You see, Bursa stock is 1818. It's trading at historical high at about 16 ringgit 60 cent, and then there's a bearish engulfing. After that, the market trends downward. Okay, the the trough is about 4 ringgit 40 cent. Okay, before it go upward. Okay, today is about 10 ringgit, but it's not historical high yet because the historical high is about 16 ringgit. Okay, let's see other blue chip stock. Okay, let's see public bank. Okay, public bank during financial crisis. Let's zoom into 2000. Okay, 2007. Okay, October 2007. Let's see the subprime crisis during October 2007. Okay, this is 2007. October. Okay, in 2007, October is somewhere here. Okay, that's okay. What do we see here? This is a continuous uptrend. Okay, the price only started trend downward during here. Okay, during May 2008, when the subprime crisis happened in October 2007, which is somewhere here. Okay, somewhere here, the market still trend upward. Okay, there's nothing happened here. Okay, so what for public bank? Okay, so let's see what happened. Let's see whether we can find any reversal pattern when it reverses. Okay, so I think this is the peak in May 2008. This is the peak, and this is a for public bank. This is a bearish harami pattern. Okay, when this appear, the price trend downward. Okay, in 2008, maybe it's at the height of the subprime crisis, the price trend downward. Okay, And what other indicator do you spot? Okay, there are a lot of dojis, and then we have two black crows here, and then yeah, basically this are the patterns that we spot. Okay, and then go down, and at about 7 ringgit, and this is where you see there are two small doji here. It means that the price is uncertain. Okay, and it's likely to reverse. Okay, and after that the price trend upward. Okay, now you see is there a mistake here? Now this one is when you see there's a 3 black crows here. Okay, these are 3 black crows. Remember, 3 black, long black candlestick, and this means a continuation pattern. Now this is where this pattern is, at this point this is not accurate. You see a 3 black crows and you suspect, and it's telling you that the trend is likely to continue, but in this case it's not, because the next day there's 2 doji appears and then the trend reverse. So it's not all the time the pattern is reliable. Okay, in this case, these 3 black crows is not reliable because it's telling you the trend is likely to continue, but then the next 2 days we see a doji and then the trend reverse. So you cannot trust it 100%. You have to take the price action with a grain of salt and with your own analysis and see whether it's likely to change or not. Okay, if all price pattern and all candlestick pattern is 100% accurate, then a lot of people will become millionaire. So we'll take it as a reference. Okay, but it's not 100% accurate. Okay, this is public bank, and let's see one of the blue chips. Let's say Maybank. Let's see what patterns does Maybank show. Okay, this is the last chart we're going to look at because there are still a lot of questions we have here for 2007 during financial crisis. Let us see. Okay, 2007. Okay, probably for banking stock it crashed in the month of, it peaks in the month, oh, for Maybank it peaks in the month of February 2017. Okay, in this case a financial crisis haven't happened here, but it's already economy slowdown. Okay, let us see what can we spot from the trend here. Okay, this is February 2017. Let me zoom in further. Okay, okay, what do you see here? Okay, there's no name for this thing. I don't know what is it called. Okay, so there's no significant reversal pattern here, but there's a dragonfly doji here. Okay, there's a dragonfly doji here. You see that? There's a dragonfly doji here to tell you the top. So there's dragonfly doji here, and then this is the bearish engulfing patterns, and then the price trend up downwards. Okay, so this is the chart. All right, so let me see if there are any other questions. Okay, or there are still a lot of questions. May I ask, could I start trading immediately by knowing this major reversal and continuation pattern, or should I learn more about candlestick before trading? Now, if you are my answer to that is I suggest you not to start immediately by only learning this major reversal pattern, because to me trading is not about candlesticks only. Okay, trading there's a lot of things in the equation. You need to learn how to read the volume. You need to learn how to see the price value divergence. You need to see how price volume divergence. You need to see how to see the bullish momentum and bearish momentum, the Q analysis. You need to see the candlestick pattern. So there are a lot of things you need to learn. And trading is more risky than investing. If you are new, I suggest you to learn more about trading first. By learning candlestick alone is not enough. Candlestick is just a supplementary for you to understand the chart better. Okay, whether the chart is likely to reverse or the chart is likely to continue. Okay, so but you can learn more aspect, like learn how to use indicators, learn how to draw support resistance, learn how to draw trend line, learn how to draw a channel, learn how to use Fibonacci, just to name a few. Okay, and trading is highly risky. I suggest you to learn more before you start trading. So next questions. I see a bull Marubozu yesterday and a Doji today. What does it mean? If I see a bull, Marubozu, and a Doji today, I won't do anything. Okay, for me, because a Doji means uncertainty. When a Doji appears, I will pull my handbrake and see what the next day unfold. That's for my personal preference. Does volume affect the pattern? The answer is yes. The volume is likely to tell you whether the pattern is reliable or not. The higher the volume, the more reliable the pattern is. Okay. Next question. Is there such a thing as an average duration of how long a trend would hold after a reversal pattern appears? As far as I know, I've never learned a thing as average duration. Okay, it depends. Okay, some on a medium frame, maybe the trend will only last, the reversal may last for maybe a week or two. Or sometimes the reversal could last longer. Okay, depending on how bearish it is. So it is very subjective. So there's no average duration of how long a trend would hold. But if you learn about Elliott wave theory, okay, apart from candlestick, just now the eighth part of the technical analysis is about Elliott wave theory. If you learn about Elliott wave theory, you will learn about how long the trend would usually last for a first wave, the second wave, third wave, fourth wave, and the fifth wave. Okay, the correction wave and the we call it a repulsive wave. So they are if in Elliott wave theory, you learn the average duration of a trend. Okay, I am not an expert in Elliott wave theory, but I think I learned that before. Okay, a fair bit. I have a fair understanding about Elliott wave, but Candlestick can't tell you the average duration of the trend. Now, the next question is, what is my standard volume numbers? And to me, it's no standard as long as I would take the average. Now, for example, in this case, what is the average? See here. You see the average is about here. See, the average volume is about maybe 6 million. Okay, if this is a very high volume, you see 52 million. So if the average, I will benchmark the average. If the average is about 5 to 8 million, then anything above 5 to 8 million I will consider is high volume. So that's my interpretation of volume. Okay, next question. Wow, this is very long. Can we say that the opening and the closing price provide more significant meaning than the high and low points? Meaning we will see the trend based on the top and low bottom points of the candlestick rather than the top and bottom point of each candlestick. Okay, let me understand the question further. Now, to me, I feel the closing price and the opening price is as important as the high point and low point, because I want to see how high the price can be pushed upward and how low can the price push downward, and then I will see the whole thing candlestick. For me, I will usually see the chart pattern first before the candlestick pattern. Okay, for example, the chart pattern is telling me it is a head and shoulder pattern. Okay, or it is a wedge, or it is a ascending triangle, or it's a descending triangle. And to me, the chart pattern is more important than the candlestick pattern. I always see chart pattern first before I see candlestick pattern, because chart pattern is a longer time frame and it's likely to be more reliable. Okay, so I think that's my answer to that. The next question is, how did I draw the resistance line? Of course, a resistance line is drawn when you connect the high points together. Okay, let me illustrate to you again. For this case, what the resistance line could be a historical high here. Okay, let's see. Okay, the resistance line could be here. Okay, and see where is the highest point tend to converge. Okay, and there's a resistance line somewhere here. You see the price break out here, supported here, go down, and then the resistance here, and then there's a support here. Okay, there's a support here. The price go down, touch the support at 9 ringgit 52 cent, go upward, and then trading within this range. And then once it's break out of this, it go back up. You see the support turns to become resistance and then go downward. Okay, and there's a support line here as well. Okay, prices tend to find support at 8 ringgit 20 cent and go up, go downward. And usually I would draw a support at resistance at a round number. 952. If 952, I write at 950 because you see, I usually like the support resistance at the 0 zone. That means 950 or 10. Okay, usually I prefer it to have a round number behind because people like human, we are human being, right? We have certain psychology. So sometimes we like how much you buy the stock. I will say, oh, I buy at 9 ringgit 20 cent. Okay, is more people more people place their buy and sell order at round number 9 ringgit 20 cent instead of 9 ringgit 21 cent. So usually I will place my support resistance at the round number like 10 ringgit 80 cent. Okay, so that's how I draw support and resistance line. Okay, it's 10 o'clock now. I will just answer. Wow, there's still a lot of questions. Okay, I will just selectively answer a few questions that I feel is important. Okay, what does the blue bell in the chart represent? Okay, the blue bell represent there's a special event like dividend, like they give you dividend or they do stock split. Okay. Next question, is Chartnexus a free software? Could you suggest any other website or software for technical analysis? Okay, for me, I use Chartnexus because it's free, and but it's free for free for 3 years data. If you want historical data, you need to pay for it. But if you write to support at the support at chartnexus.com, they can give you additional 1 month of or free data if you mention you're from LiveChamp. Okay, and other software charting software, some could be some is paid. But you need to pay for data or you need to pay for a subscription. Okay, let me see questions. How do you forecast when is the best buying point during a reversal? Do you use Fibonacci? I usually use Fibonacci. I'm not a frequent user of Fibonacci, but when I fail to find a resistance point of an uptrending stock, I would use Fibonacci to try to help me to predict when is the likely target profit area. Okay, so that's my answer to that. How many percent of success if I apply this candlestick analysis is the next question. Of course, I don't know, but when the candlestick pattern falls in it comes with at an important level and it is higher success rate. Okay. All right. Next question is, for technical analysis, how many type of indicators should I use? Okay, for me, I goes for a very simple way. I usually look at naked chart. I look at volume, look at the price and volume divergence, see whether there's price and volume divergence or not. I draw support resistance line, I draw trend line, I draw channel, and then I look at candlestick pattern. Okay, for me, I only use at least 1 or 2 minimum. I use maximum 1 or 2 indicators. Like if I want to see whether there's a volume or not, also there's a momentum or not, I will use MACD. My personal preference MACD. If you want to see whether if it's trading in a range, I would use oscillator. Okay, to help me. I'm a minimalist. I don't rely a lot of technical indicators. Okay, but it's up to you. Is candlestick more accurate than the other indicators? Like I mentioned earlier, candlestick is a leading indicator. Candlestick pattern will, for leading indicators, it is higher chance for it to be not reliable. But a leading indicator is faster. Okay, it is a leading indicator, so it helps you to forecast the price. Of course, it makes more mistake than a lagging indicator. But usually, lagging indicator is very slow. When you see the lagging indicators tells you the change in trend, the trend has already changed. But the candlestick could tell you, oh, there's a reversal, the trend is likely to change. So candlestick tells you faster than the lagging indicator, which often tell you after the trend has formed. Okay, so in this regard, candlestick, in terms of accuracy, I will feel that lagging indicator is more accurate than a leading indicator. Okay. Next question. Okay, all are some similar questions. Can show how to draw Fibonacci retracement and extension. Now, well, this is not about Fibonacci, so I will skip this session. Okay, There's another question. Please just answer my question. How do you choose a stock in Bursa since there are so many stocks in Bursa and it's the most active and biggest winner or what? Okay, so the question is very long. And how do I usually choose a stock in Bursa is when it comes to investing, I will pick the stock. I will use a top-down approach. Okay, I usually look at the theme. At the theme, let's say now ringgit is very weak, I would look at export theme. In export theme, I look at the sector. Which sector is likely to appreciate? Okay, probably industrial sector, E&E, or light manufacturing. And then I pick one of the sectors, and then I pick one of the sector, and then I go into study the stock in the sector. And let's say we pick glove sector. Okay, if the theme is export when the ringgit is very weak, and then the export will do extremely well. So I go to the glove sector, and then I pick what are the glove stock I want to buy. Okay, let's study a Top Glove, Kosan, or Supermax, or the Hatta Lega, and then see after I see which stock has a great potential, and then I go to the charts, and then I buy slightly above the support level. Okay, I will look at the chart for possible entry. Okay, so for me, it's top-down approach. I look at the Malaysian economy, and then I go to that sector, go to the industry, and I pick the company that has the greatest potential in that industry. Once I pick the stock, I go to the charts and see what is the likely entry point and exit point. Okay. Now the next question is technical TA versus FA fundamental analysis. Which one is more recommended for newbie investor? For me, if you are new, I recommend you to go for investment. As far as investment is concerned, we look at fundamental analysis. We study the company business, we study the company management, we study the company's financial statements. Okay, and then you buy, you hold it over a period of time, and then make money. For traders, it is not so recommended for newbie investor because trading carry higher risk than investing. Okay. Can I have your previous webinar series recording? Of course. Okay, we will send it to you. Okay, we'll send it to you. I think we'll put up the link, previous recording link on our Facebook, and then you can go and watch the previous recording. The next question, which is the last questions. Okay, after these questions, actually we are already over the time. Any pro and con fundamental analysis versus technical analysis? So that's a question asked by De Law. Okay, so for me, fundamental analysis will tells you what to buy, where technical analysis will tell you when to buy and when to sell. Okay, of course, when you do technical analysis, you need to stick to the screen and look at the possible price pattern, and then you need TA is mainly very charts. Is a chartist, while FA is mainly very value driven. You look at the company's worth when it comes for the value. So those investor, if they are pure fundamental, that means they are a fundamentalist, they completely ignore the charts. They see whether the stock is worth 5 ringgit, but the price is 2 ringgit, they will buy. They don't care about TA, and then they tend to make money. So for TA, some of them pure TA, which is technical analysis, they don't look at, if they're pure TA, they're strong believer in technical, they ignore totally the fundamental analysis. They don't look at the stock, what does business do, they only focus on the price. Okay, and when the price has momentum, when the momentum comes, they just whack the price up, and then make money from the short-term volatility in the market. So the con with the technical analysis is you may forget what the business is doing, and you subject yourself to greater risk if there's a manipulator or syndicate behind the stocks that goring the stock up and goring the stock down, and then you would subject yourself to losing the money. Okay, but if you are very good in understanding momentum, understanding the sentiment, then you can make money on the short term. So the pro with TA is you may make money on the short term. Okay, but the con with TA is you may also lose a lot of money in the short term. So TA is quite time consuming because you need to stick your eyes to the screen during the training hours, and most of us have, if you are if you have a 9 to 5 job, you are unlikely to trade using doing day-to-day trading. You will probably use technical analysis at night and see whether there's a bullish reversal pattern appears in the chart, and then the next day you place an order. Okay, so there's a pro and con for TA and FA. All right, with that, I would like to close today's webinar. But of course, let me show you that the webinar is not only for uh, we have a series of webinar for you. Okay, just give me a minute. Okay, now, ladies and gentlemen, for next, I want to thank you for your time for today's webinar, which we explore about the candlestick pattern. And to bear in mind is that there are a lot of, hundreds of candlestick patterns. You don't have to learn all, you just need to learn a few important ones. For reversal, it's a hammer, inverted hammer, shooting star, evening star, Doji star, hanging man. These are important reversal. Okay, like dark cloud cover and bullish engulfing. These are important reversal. For continuation, the most important is the three white soldiers and three black crows. Okay, now, and you use in candlestick pattern in the context of use indicator in the context of the candlestick pattern and the chart patterns. Okay, so next webinar we'll talk about how to invest in growth stock. Okay, and the date is 4th July. It's a Tuesday. Time is from 8:30 to 10 o'clock, and we can register here. Okay, later I will write the link, share the link to you over the chat room. Okay, just now there was one person asking me what is my Facebook page. Okay, now because they want to get a recording, right? You want to get the recording, you can go to a live champ Facebook page. We go to www.facebook.com/my-live-champ. Okay, and then we'll post a recording there. Okay, with that, I want to thank everybody for paying attention on the webinar. My name is Shane, and if you want to connect with me to get more market updates, you can go to facebook.com/ShaneTru7. That's how you can connect with me. With that, thank you everybody for participating. I'm going to share with you the link for the next webinar, and then after that, we would call it a day. Okay, okay, this is the link for the next webinar. Okay, I have just posted it. Hang on, yeah, in the chat group. So this is the next webinar link. If you want to connect to the next webinar, you want to register for next webinar, use the link. With that, thank you everybody, and may you have an enjoyable evening. Thank you everybody, and good night.